Friday's rally extends to Monday. Benchmark scale fresh highs for a second day. Sensex starts the week above 73,000 mark and Nifty soars to 22,000. Broader markets remain firm. Mid-cap and small caps open in the green. Meanwhile, Nifty IT skyrockets over 3%, followed by Realty and PSU banks. On the other side, farmers underperformers. Reliance Industries and tech majors spearhead the Nifty rally as the market is pricing softer US macros and Fed rate cuts. Meanwhile, earnings candidates Wipro and HCL Tech soar post Q3. And the World Economic Forum kicks off today as Davos. Top political and corporate voices to attend the summit. Catch that coverage through the day on NDTV Profit. Hello and welcome. This is the F&O Show. I am Agam, Vakil, and in this show, we take you through all that is happening in the futures and options space in Indian derivatives markets. But a quick look at the markets and how they're faring. Well, we are looking at new life highs, Nifty in and about around 22,000 for now, and we are looking at some substantial gains from the information technology pack itself. So while we did see a lot of impetus last Friday, that's coming through and translating in further on the back of perhaps, better than expected earnings from HCL Technologies. And Wipro, while the earnings were tad weak, I reckon the expectation is, the entire information technology pack turning a corner of sorts. The question really is, can it really? And if it does, how long will it take? But for now, we are looking at that particular sector leading the gains for the benchmarks. Let's take a look at the contributors as far as the Nifty is concerned. Surely there will be a lot of gains on account of that particular index. And so there you have it. So we do have advances for Infi and HCL Tech, which are leading the gains. Of course, among the banks, we also have HDFC Bank, where we're seeing a lot of options trading as well. So keep an eye on that one. The Bank Nifty advancing once again. And HDFC Bank, of course, the biggest constituent and biggest contributor as far as the Bank Nifty as well as the Nifty is concerned. Let's, focus our attention to what's happening in the futures and options space. And for now, as far as the Nifty is concerned, while we see the futures trade above the 22,000 mark, we've seen another 2.5% added towards open interest. Of course, and this is largely around the fresh longs. As far as the Bank Nifty goes, again, that is where we are seeing an advance as we speak, but not as much increase in open interest, about 0.5% addition there. But of course, the big takeaway here is that the Bank Nifty is also currently trending well above the mark of 48,000. Which means that a lot of 48,000 calls which had been written earlier have started unwinding. This was also perhaps in terms of expectations on, largely in probabilities and factored in. But that said, as far as, some of your options go, when specifically your option pricing, at the moment we're seeing a lot of open interest, around the 22,000 call. And, that's where we're also seeing a large change in OI. So let's pull that up and let's take a look at where the change in OI is standing at least as far as, yes, there you have. That's your change in OI. And of course, while we are seeing a lot of unwinding around the 22,000 call, we are also looking at a little bit of writing around the 21,900 and 22,000 puts. Naturally, because the Nifty has advanced and moved higher and it's also taken out, which will also result into a lot of unwinding of the 22,000 calls which were written in the previous few sessions. But that's as far as the Nifty is concerned. And the question really is that where do we go from here? Before we take a look at what's happening in the markets, well, we had earnings from Anand Rathi and the revenues have jumped well over 30%. That is the same for the EPS as well. And of course, we spoke to the management about the company's earnings and also what we can expect going forward. This is a slice of that conversation. Listen in.
We are building a business which is relatively agnostic to the external environment. It is easier said than done because you are in the business of investing. Of course, some degree of tailwinds and headwinds happen. But if you look at the last 6 quarter results, we've been listed. This is our 9th quarter result after having been listed. The first 2 quarters I would discount because the base was too small. Any growth from the COVID year needs to be ignored. If I look at the 7 quarters which have gone by, other than the 2, which had a base effect, which I would like to ignore. The mean growth we have given is about 33.8 to be precise. The median growth we have given on those 7 quarters is also 33.8. And the standard deviation of the growth number on a quarterly basis is about 5%, which implies that the range of results on a year-on-year basis quarterly has been in a very tight range, and God has been kind. That's point 1. Point 2, if you look at our 7 quarter results, it looked like it has been a very uneventful 7 quarters. In the same 7 quarters, we have had a Nifty go from 18,500 in October 2021 to 15,200 twice. We have had a Ukraine war. We have had a inflation shock in the US and the steep interest rate increases resulting from those. So if you look at our results, it will look like a very, very calm water over the last 1.5 to 2 years, but that's not been the case in the external environment. I'm just trying to prove the hypothesis that we are trying to build a business which is not only dependent on a tailwind coming, but it is from a client portfolio standpoint, whatever is right for them. If you do that, then you automatically build a business where in bad times, clients give you more money because they trust you more in bad times.
Interesting. So what differentiates you from competition? Because when you're looking at some of the AMC numbers, 34%, of course, nowhere close to that. So what's helping you stand out in the current market and in the current environment?
What helps us stand out is, see, the asset management companies, if I describe our business, they are similar businesses. They are alpha managers. We are beta managers for the client. Beta managers, by which I mean I do my asset allocation, manage the risk of the portfolio. If I have to use an asset management company's service to generate alpha or a benchmark, I use an asset management company. So that's the key differential between the 4 listed asset management companies and us. We are in the beta management business. They are in the alpha management business. That's one important difference. Second thing is we are in the HNI business, because to run this business ethically, you're going to be earning 1.25 to 1.3, 1.4% per annum. So if you have a smaller ticket client, it becomes difficult to give ethical advice without being biased. If there's 1 crore, then you're just earning 1.3 lakhs a year. And that's not good enough. So the average size of the client has to be really large if you're not just going to be a technology-led business. So what we believe is that you go into the HNI business. That's why we are in the HNI business in the primary company, which is the holding company. And that helps us give right advice, create portfolios, design those portfolios by testing 5,000 odd portfolios. We recommend only 3 portfolios to 4 portfolios. Those are very, very strongly back tested, even front tested using simulators, so that the outcomes are more predictable. So you're not over committing to a client, and we are always under committing and over delivering. Either it be the result or be it a client expectation with respect to the return risk profile we create for them in the form of portfolios.
Sure, fair point. But, you know, there has been some amount of chatter in the industry with regard to fees coming down, with regard to both from an AMC standpoint as well as from an asset manager standpoint. Now, what are the risks of that from a regulatory standpoint, and what's the risk of that on your business specifically?
See, Harsh, of course, fees get compressed. Economies of scale needs to be passed on, is what the regulator rightly says. because mutual fund is a very transparent platform and we are one of the largest distributors in the country. But we believe that in equity mutual fund, there's enough to add value. Because the best and the worst equity funds deliver 25-27% return differential. So if you add value to a client in terms of a distributor doing the kind of research which is needed, so we have 122 research people. So there is a battery of people only doing mutual fund research, which is in the marketplace considered to be a very, very commoditized product. We analyzed about 1,600 HNI portfolios externally managed transaction-wise, and we've beaten 94% of those portfolios using our model portfolio. So if you add value, you will be able to protect your fee. One. Point two is I think economies of scales can squeeze your margins by 5-10%, and that's very easy to mitigate. Last 7-8 years, the commissions have squeezed as well. Adversities happen in any business. It's about the capability of the professionals running that business, who could maneuver and traverse the path of uncertainties. I can surely tell you that there is going to be challenges thrown at any business. And if you look at the challenges we have navigated over the last 5-7 years, that should give some degree of confidence of how we react positively when there are challenges, and what kind of strategies we pre-plan before any of those knock on our doors.
Right, that's the management of Anand Rathi, giving us a very robust picture and some ambition, along with plans, what in fact could propel the company even further going in. But on that note, shifting focus back to the futures and options space, we have experts who are joining with us on the show. Vinay, Rajani, CMT and Senior Technical and Derivatives Analyst at HDFC Securities, and Patel, he's a research head at Investmentor Securities, who's joining us on the show. Gentlemen, good morning and thanks so much for joining in. Vinay, I start with you. Let's start with your view on the benchmarks now that the Nifty has tested 22,000.
Yeah, good morning and thanks for having me on the show. So we are into clear-cut uptrend. Nifty has been doing very well, outperforming the Bank Nifty, and today is the 5th consecutive session when Nifty is rising and we are at into uncharted territory. And the next resistance we see in the Nifty is at around 22,250, which happens to be the Fibonacci extension level. So we are into a momentum, and because of the IT sector contribution, Nifty has outperformed and into a continuation of an uptrend. The previous resistance, which was around 21,800, now becomes a strong support. So keeping that stop loss in mind, one can continue to hold on to the long positions. And I'm expecting that intraday dip should be I think bought into, and ultimately we are heading for the next target of 22,250 in the Nifty. As far as Bank Nifty is concerned, Bank Nifty is no doubt is doing well. Today, PSU banks are into some traction, but today's high is quite strong resistance around 48,115 spot. There is a downward sloping trend line, which also makes the descending triangle on the daily chart. So it gives a strong resistance at that level. Once we see Bank Nifty crossing above 48,115 spot level, then we can see a momentum coming back into the Bank Nifty. So far, Bank Nifty has not performed that much. So rotation is going on. So ultimately, bias is towards the positive side. So I'm expecting a breakout on the upside. So above 48,150 in Bank Nifty, we may see a target of 50,000 also in 1 or 2 weeks. So overall, data is good. Derivative is also good. Last week, we saw 5% open interest build up in the Nifty. Bank Nifty on Friday, we saw 10% short covering was there. So first sign of long positions can be seen in the Bank Nifty as well. So overall scenario is good, and intraday dips should be bought into. And positional support for Nifty comes at 21,800, and Bank Nifty support placed around 47,500. And those supports can be utilized to create a fresh long positions in both the indices.
Okay, so stay with the trend on the upwards with the 21,700, 21,800 levels as a support for the Nifty, and 47,500 as a support for the Bank Nifty. That's the view coming in from Vinay. Rajani. Jay, good morning to you as well. How are you playing the benchmarks, and what bets are you placing here?
So good morning, Agam, and good morning, everyone on the panel. So definitely, I am also riding the bull. 22,000 has been taken out in today's trade, the gap up opening, and we believe market could go about 22,200 zones, because if we see the option selling data, particularly on Wednesday and Thursday, it was more than 1.5 lakh crore. So definitely, there's just something strong resistance at above levels. 22,500 maximum call addition we saw, 22,400 and 20,300. So definitely, this week would be interesting one, and we can see this week's closing maybe on the higher side, and we can see a new all-time high coming in the Nifty particularly. Also for the Bank Nifty, if we look at, I believe HDFC Bank and ICICI Bank could outperform, and that's why taking Bank Nifty towards 49,200 to 300 zones. So I believe Bank Nifty we can see a breakout above 48,170 zones in maybe 2 days or tomorrow trade. HDFC Bank results are coming tomorrow, and I believe that with results also the Bank Nifty could go above that level, and we can see new all-time highs in Bank Nifty too. I believe this chart structure is quite similar to TCS if we compare with HDFC Bank, because before results the market has discounted everything, and with results coming in flatter note, we saw the stock performing very well. So I am expecting the same for HDFC Bank and the Bank Nifty, the similarity.
Right. Well, we're all certainly anticipating the 50,000 mark on the Bank Nifty, and that's something that a lot of participants are also betting on. Of course, it's on a positional basis. Eventually down the line, we're not too far away from that level, but it's not too approachable either, at least in this case. So at a positional, 50,000 is not completely ruled out, but it's going to be a bit of a task, and of course a lot of that will depend on the kind of earnings that we get from the banking space. And if we do in fact get that support from the banks, and a whole host of banks like HDFC Bank, Kotak Mahindra Bank and ICICI Bank will be coming up with their results today, not this week. And if we actually do see that support coming in, then, well, 50,000 certainly can be on the charts as far as the Bank Nifty is concerned. Keep an eye on these levels. But on that note, we slip into a short break. But on the other side, we talk about stocks and a lot more. Stay tuned to NDTV Profit. Welcome back. Let's talk about stocks now, and let's pull up all the stocks which are looking at a gain in open interest in today's day of trade. What could potentially be towards fresh longs or shorts, and I'm sure there will be plenty out there to talk about. So we do have L&T Technologies emphasis, surprisingly, from the IT space, which are in fact looking at shorts building up as we speak, even though their underlying is not looking at too much in terms of change. But there certainly is a substantial increase in open interest there. HDFC Life is the other one that is declined, and of course, earnings will be something that will be weighing on it. But on the flip side, the other general insurance company, that's ICICI Lombard, well, that's the other one which is in fact advancing in today's day of trade and looking at longs building in. And ONGC, of course, we're also looking at an up move there, so some longs building up there as well. Let's move on and talk about all the stocks which are looking at unwinding coming through, and of course Metropolis, which is under pressure, HDFC AMC, Coforge. All of them are seeing about a short covering. Metropolis is not under pressure. In fact, it's advancing right now. We're looking at a decline in open interest there. The only long unwinding counter in that list is Hindustan Copper. Besides that, we're seeing advances, and naturally, I reckon a lot of positions being unwound in a handful of those names. But we do have a handful of ideas as far as trading goes from our experts as well. Jay, I'll come to you. You have an interesting one. That's HDFC Bank, along with another name from the pharma space. Can you take us through your calls?
So my first call would be on HDFC Bank, because if we just talked about the Bank Nifty's chart, and particularly on the HDFC Bank side, we saw the stock is beating down since 26th of December, and continuously the stock is in a downtrend move. 1640, the stock has taken a good support at that level. That is around 34-day exponential moving average. And currently the stock has moved above its 9-day and 21-day exponential moving average. Thereby, I am suggesting the stock can move above these levels, and 1720 can be something we can look as a target for HDFC Bank. I guess this is a little small target particularly, but the bank can outperform, banking index can outperform, since this is a heavyweight. This can move Bank Nifty and Nifty to a new high. So definitely HDFC Bank with good results coming in, I would suggest the stock can be a good bet for 1 or 2 days, and I believe 1720 we can see coming in the chart, and can keep a stop loss at around let's say 1638. That is 31-day exponential moving average. So I'm very bullish and very risk-reward ratio wise, I'm very watchful of HDFC Bank. The second will be Aurobindo Pharma. Today we saw our performance coming in from pharma space, and Auro Pharma has performed very well. The stock has taken a breather, and continuously the stock is trading above its 1100 levels, and currently we see a breakout above 1130 zones. Thereby, we suggest for a new buy for this stock, and I believe we can see a new highs coming in this stock. The target would be placed at 1195. Also, if these levels is taken out, we can see towards 1240 zones. For this stock, I would suggest the stop loss to be kept at 1095 levels, since the stock has performed well in past few minutes. So I believe the stop loss can be trailed above in the above zones. 1110 can be kept as a stop loss, since the stock has surpassed these levels.
Since Jay has spoken about HDFC Bank, I want to very quickly address what's happening there. Now, do remember the earnings are slotted for tomorrow. That's the 16th of January. I'm looking at the options chain for HDFC Bank. And on an average, in terms of open interest for calls, well, the average would be roughly around 20 lakh shares. But the open interest number for the 1700 calls stands at nearly 80 lakh shares. That's more than 4 times the average of all the other strikes put together. This is an interesting one. And on the put side, of course, once again, in any of the strikes, as far as puts are concerned, we are not looking at as much open interest, as much as what we are seeing at the 1700 call. The question really is that What are traders at the moment trying to factor in? It's very interesting that Jay has already mentioned that he's looking at levels of somewhere around 1720 odd, and which could be a possibility. And in fact, if HDFC Bank does go to that level, we will see a lot of unwinding with respect to all the calls written at around 1700. And if that call writing starts getting to unwound, well, there's no saying as to where on the higher end can HDFC Bank go. And because Jay has also mentioned a long call, well, of course, should that call in fact play out in your favor, it will also mean quite a bit in terms of profitability. So do watch out for that one. And we're, of course, going to keep an eye on the earnings on a fundamental basis as well. But Vinay, I come to you. Can you take us through your views and a handful of stock ideas that you can tell us about?
So basically, I am bullish on the NBFC. Some of the NBFC space in derivative segment has been performing very well, and one of the stock which is trading around its all-time high is the Chola Finance. So there is a fresh move today after some running correction. The stock in cash is trading at 1284. I suggest going long in the Chola Finance January future around 1280, looking at the primary trend and the kind of momentum which we have seen during the day. So Chola Finance January futures can be traders can go long at 1280. Stop loss can be kept at 1260, and on the upside we can expect a target of 1310. Second pick I would like to take is the Titan. So Titan announced a good numbers, and after some consolidation it is breaking out again from the consolidation, so resuming its uptrend, and primary trend is bullish. So there is no doubt about it that it is one of the stock which is looking extremely strong on the charts and resuming the primary uptrend. So Titan January futures can be bought at 3768. I would suggest a trading stop loss at 3720. On the upside, I'm expecting target of 3850. So basically, I'm bullish on Chola Finance and Titan, and traders can utilize this trading opportunity in the January future with the mentioned stop loss.
And Titan is another interesting one, because just a few sessions ago, 6 sessions if I'm not wrong, that's where it's made its life high, and its intraday life high is at around 3,776. It's not far away from that particular mark, and it is already trading at 3,764 odd, 10 odd more points, and it would potentially go into uncharted territory, which is why Vinay's call also is a very, very valid one. And once it moves into uncharted territory, once again, we don't have too much of, too many technical parameters, because that means that it will move into another zone. The question really is can it close above its life high today? And if it does, what kind of longs can we start anticipating as far as Titan is concerned? As Vinay has once again mentioned, already on a fundamental basis, it's already indicated a very, very strong quarter gone by. And, it's just moving from strength to strength. So clearly in an uptrend. So that is also something that we need to watch out for. HDFC Bank and Titan are the two big names on my radar. Well, on that note, going to take a moment to thank both our experts, Jay and Vinay, for taking us through their views on the markets and also giving us a whole host of trading ideas. And with that, it's a wrap on the F&O Show. But stay tuned to NDTV Profit for more news and updates.